I'm seeing a massive tailwind in the stock market that could cause huge outperformance for a specific sector, and this sector has been dead since 2021. And I told you guys about this sector back in April, and I told you that those stocks will likely be leading the market in the second half, and this has so far been playing out. But there's another way to bet on this sector indirectly, have exposure to it, and I believe if you have exposure to this sector in any way, shape, or form, you're likely going to do extremely well, because a lot of the potential profit growth that could come in those companies are pretty much not priced in those stocks. And I'm going to give you 3 ideas today of how you could bet on this sector, and I'm going to talk about this in general, and I really hope you enjoy it as always. Now, the sector is mainly the housing sector. We have the most unaffordable prices since 2006. It's called the 2025 bubble, and homes are just unaffordable in general. They're too high in terms of prices, and we have much higher mortgage rates than we had 2 or 3 or 4 years ago, and a lot of people got priced out of the market. Now, we have many catalysts that could potentially benefit housing over the next 6 months to a year and a half, and the timeline is key. The first one is Powell's term ending in May 15th of 2026, and we're likely going to have a new Fed chairman that's going to be appointed by the president, and the president has made it clear that he wants to do whatever it takes to lower interest rates. So I would not be surprised if the next Fed chairman is a little bit more dovish than someone like Jerome Powell. So this is a major catalyst. Another catalyst is the 2026 midterm elections, which starts on April 7 to November 3rd of 2026. Now, if the US government and if the president wants to get reelected in terms of the House and the Senate, they're going to have to do something about housing, and they're going to have to do something over the next few months. And Scott Bessent himself, the Secretary of Treasury, he says that President Trump might declare a national housing emergency in the coming months, and they're going to have to do it if they want to get reelected. Housing is a major problem for most Americans, and they're going to have to do something about it. Now, I believe the housing emergency kind of announcement could potentially help the country and help builders build a little bit more homes, but this is not going to be alone. And one way to bet on it is, of course, on the home builders, which the home builders have been showing a lot of strengths over the last few months, and they have been outperforming a lot of tech stocks and many different stocks, and it's up 15% over the last 6 months. This is one way to bet on it, and that's what I told you guys back in April. But there's a second one, which is my favorite way to bet on this sector, and this is mainly in refi or refinancing in general, because a lot of people have bought homes and 6-7% rates. They want to refinance, and some other people want to move and they want to get a new mortgage, and that also affects credit scores in general and getting financing. So I believe financing in general and refinancing is a much better way to bet on the housing sector than just buying the builder. And that was a survey that was asked, I believe, to 1,000 Americans that have bought a house recently, and they asked them how important is refinancing in the next 3 years. 25% they said extremely important, 31% important, 25% is slightly important, and only 19% out of 100 they said not important. So refinancing for most Americans is extremely, extremely important, not just if they want to lower their cost, but if they want to move to another house, they want lower interest rates, and if they want to get reelected in Congress, they're going to have to do something about housing. Now, I believe we're near at the bottom of the cycle in terms of originations for mortgage originations. If you look at this chart, it's the lowest since I have the data since 2013. This is the lowest ever. So it has to potentially pick up from here, especially with the government determined to lower interest rates. And if you look at it on a quarterly basis, mortgage purchase origination, it's at record lows. Mortgage refinance originations, it's also at record low. So you're really going to have to do something about it. And I believe this is an interesting sector. Now, in terms of the 30-year mortgage, it doesn't really follow what the Fed does in terms of the overnight rate. So it doesn't really follow the Fed fund rates. It mainly follows the 10-year. And you can see the correlation between the 30-year mortgage, which is in the yellow, and the 10-year yield, which is in white. And this is almost a perfect correlation, almost 90 to 100% correlation. It's very, very correlated with the 10-year. And the Fed doesn't really affect the 10-year directly, but they do affect the 10-year if they lower interest rates, which could help cap off the yield on a lot of those mortgages and on the 10-year specifically. The second way they could do it is if they're doing quantitative easing, meaning if they're buying back a lot of treasuries and they're buying a lot of them, that could help lower the 10-year, which could potentially help lower the 30-year mortgage rate. If they're also buying mortgage-backed securities, MBSs, which has happened recently, and they have never really done it before, but they've been doing a lot of it over the last few years. If they buy back mortgage-backed securities, that could also help lower the 30-year mortgage in a major way. So my favorite way to bet on this sector is mainly through refinancing and loan origination in general. There's three of my favorite stocks that I'm going to share today, but any stocks that you own, any bank or any maybe upstart or any kind of stock that has exposure to refinancing or financing in general could potentially do extremely well over the next 6 to 12 months because of urgency on the midterm election. You have many different catalysts. They're going to have to fix housing by then, and they're going to have to do it quickly. Now, the first one, which I talked about recently, and I would encourage you to watch my deep dive in this video over here, and this is FICO. FICO is one that has the FICO scores, so they all need FICO scores pretty much if they want to refinance or if they want to get a new mortgage to see if they're qualified to get this mortgage. Now, FICO is still down 24% year to date. You know, the market is waking up to this trend that I'm talking about. The stock has started to move. It's up like 8%, but it's still down 24% year to date. The stock is not cheap by any means. It's trading around 45 times earnings, which is the average, but the company has crazy margins, a very wide moat, and they're growing 20 to 25% in earnings per share. And now they're growing 20% in earnings per share with mortgage origination at all-time low. Now imagine what's going to happen once they start picking up. The growth is going to be insane. And maybe this is one reason why FICO may not get as cheap as a lot of us might be hoping for. So that to me is a very interesting idea. Another idea that I have, which is a stock that I own, is SoFi. SoFi is an indirect way to bet on refinancing and to bet on home loans in general, because you have the overall company, you have the investing products, you have student loans, personal loans, and you also have home loans, which have been at a record low, and they could potentially pick up in a major way. And SoFi is the cheapest of the three because the company is still expecting to get 55 to 80 cents in earnings per share by 2026. And normally the CEO issues low guidance, so he could beat. So if they get 80 cents by 2026 and the current P is at 61 times, we take a multiple contraction from 61 times to 40 times, which is a massive contraction, and we take the 80 cents, we time it by a 40 PE, we get $32 per share. The stock right now is trading at $25 per share, so you're getting around 28% on the upside over the next year alone with a company like SoFi, and they'll be growing earnings per share 20-25% a year. And again, the whole housing trend, mortgage trend is not priced in those estimates. The mortgage stuff and housing could be a plus for a company like SoFi, but if they act quickly in terms of the government and the Fed chairman, it could be a major plus, and it's not priced in a company like SoFi. Another way to do it, which is a little bit more expensive, is Robinhood. Robinhood is offering a crazy discount on mortgage loans, like I believe a 75 basis point discount, and a lot of younger people will likely refinance or get a home with a company like Robinhood. It's attracting a lot of people and have a good product. Now, the only thing with Robinhood is it's trading at 59 times forward earnings, and it's a little bit expensive for Robinhood, but Robinhood is growing earnings per share at 100%. I'm not sure how sustainable it is, but it's growing at 100%. I personally like it a little bit more, around $85 or below. I own the stock with a $32 cost basis, but I think $85 or below would be interesting. I think SoFi is the most interesting of the bunch. And then you have FICO, which I believe is somewhat fairly valued, and it might not get as cheap as a lot of you guys may hope, mainly because of the housing tailwind. And this is a powerful one because the government, they have the incentives, they want to get reelected in Congress. And if they want to do so, they're going to have to fix housing, and they're going to have to do it quickly. And my favorite way to bet on it is not, I believe, builders right now. I think the builders have mostly started to play out, but I think refinancing in general, any stock that has exposure to refinancing, I think would do extremely well. So I hope you enjoyed it. Hope you got some ideas. If you're interested in what I'm buying, what I'm selling, I share everything in my group. And this is the link if you're interested. But thank you again. Hope you enjoyed it. And if you did, let me know in the comments and I'll talk to you in another video.